Hello traders. So today I'm going to be talking about the best futures product for beginner day traders. Quick risk disclaimer. Active trading and investing involves a substantial amount of risk and is not suitable for all investors. You may lose all or more of your initial investment. Past performance is not indicative of future results. So before we start, the views in this presentation are my opinion only. Traders should use their own discretion to trade the product that best matches their own situation, trading system, or trading style. This is because trading the right product is vital to your success as a trader. Now, when I think of a beginner, I think of these 4 points. Somebody who has little to no experience trading, somebody who has a very small amount of capital to get started in their trading career. They specifically need a market which is stable and allows them to grow as a trader. And again, this is for day traders. So we're looking at someone who wants to actively trade, perhaps scalping or day trading. Somebody who takes trades every day or multiple trades a day. This is not meant to cover swing trading or anything else longer term. Some very important points. Successful day traders can thrive only trading a single product. Okay? You don't need to trade 3 different things. You can just trade one thing every day and do fine. Another key point, it is unlikely to profitably trade one product exactly like another. Now, later in this video, I'm going to talk about a few products which are similar, but what applies to one product may not apply to another one. You know, if you have a system which works on one product, there's a very high chance it will not work on another product. So with that in mind, knowing the characteristics of your product will make or break you as a trader. So I'm going to be covering a few different products today. We've got 3 stock indices, the T-notes and bond, as well as the big one, crude oil. So we're going to be looking at the E-mini S&P 500, also known as ES, the E-mini Nasdaq, NQ. A new contender, probably one a lot of people have not considered before, is the mini Nikkei 225. Then we have the 3 popular T-note and bond markets, the 5-year note, the 10-year note, and the 30-year bond, and crude oil. So let's get started. ES, this is probably the most popular trading product, the S&P 500 E-mini future. The tick is $12.50, average range of about 80 ticks. Trading cost is kind of on the higher side. It's about $4.10 per contract, round turn. ES is really famous for having solid liquidity and very good volatility. So it's a great product for traders of any skill level, and it's extremely popular. You could start learning your trading on ES and trade this for 10 years, and you'll be fine. Now, I think it is a great entry point, but I think there are some other things that people may want to consider and may want to investigate some other products before deciding if they want to be an ES trader. I think that the tick amount, $12.50, is a little bit on the higher side based on the amount of volatility that you have. So it can be a little bit dangerous on smaller accounts. With like a $1,000 account, it could be kind of risky to trade ES unless you're willing to risk a large percent of the account. Next, the E-mini Nasdaq. Now, this is a smaller tick, $5 per tick, but if you see here, the average daily range is about 400 ticks. So looking at the ES, on one contract, you can make or lose about $1,000 a day. On Nasdaq, you can make or lose about $2,000 a day on a single contract. So definitely keep that in mind. Trading cost is similar, $4.10. This is probably one of the worst ones in terms of cost per tick ratio. If you get a single tick, you'll only make 90 cents. Now, Nasdaq is it's a very thin product, so it's not as liquid as something like ES, and it's very, very volatile. So there are big moves, and there is kind of a very small amount of contracts being traded at each price range. So it's very high risk. Again, the tick to commission ratio is pretty low on Nasdaq. So, not so great in my opinion. Ticks are small, but swings are big. So you need wide stops and wide targets. This is where the idea I mentioned before, trading the same way on a different product, you may risk something like 8 ticks on S&P 500 to win maybe 20 ticks. On Nasdaq, you'll need to risk like 20 ticks to win 60 ticks. It's just a wider product, wider swings. It can be very trendy. Nasdaq sometimes gets caught in trends, which can be good for trading. But I would recommend staying away from this as a beginner. A lot of people look at that $5 tick size and say, "Oh, it's safer for my small account," but this thing will whipsaw you to death, and you could lose a lot of money very quickly on Nasdaq. All right, kind of an interesting one here, the mini Nikkei 225. This is actually based on the Japanese stock market, the Nikkei 225. The tick is about 500 yen, which as of now is about $4.50. The average daily range is 60 ticks. So again, one contract, you'll see a swing of up to about 30,000 yen or $265. Trading cost is about $1.50 per contract. Again, this changes depending on your broker. Very similar to ES in terms of liquidity and volatility. So it's a little bit thinner. So it can be a bit more spiky, I think, compared to ES. But it's very similar. It's like the Japanese version of ES. Now, the big thing about the Nikkei that I think makes this a great product that people should really consider for their day trading adventures is the trading hours. So the Nikkei high volume session is between 9 a.m. Japan time to 3 p.m. Japan time. There's a 1 hour lunch break. But in the US, that's 8 p.m. Eastern to 2 a.m. Eastern. So if you work a day job, you come home at 6, 7 p.m., you can start trading at 8 p.m. and not have to give your day job. Pacific time starts at 5 p.m. to 11 p.m. So someone who wants to day trade part-time, or I guess night trade, this is actually a great product. If you want to trade during the high volume session, this is probably it. Unfortunately, if you want to trade something like S&P 500 or Nasdaq, one of the stock indices, you kind of need to trade that when the stock market's open, which could have some issues with your day job. Whereas the Nikkei, it's open when you're not working your main job, so you could part-time trade this for maybe 2 or 3 hours a night, and you'll get the great volatility, great liquidity during those times. So definitely consider this one. A key point though, you will need to find a broker which supports this, and your account, even though it's based in US dollars, it will be based in yen, so you will be paying a forex exchange rate sometimes when you make the trades. The interesting thing though is that actually if you sometimes you might lose money on the day trading, but you actually make money from the forex exchange rate. So I would not worry about that too much if you decide to trade this one. Mini Nikkei 225. Great product for beginners, for part-time traders who want to day trade or scalp. All right, so now we're moving on to some of the Treasury's products. Now, these might sound kind of boring, but I actually started seeing most of my success in Treasuries. So we'll start with the 5-year Treasury note ZF. The tick size is a little weird. It's 7.8125. It'll make sense later. The average daily range is about 26 ticks, about $203 on a contract, the full range. Trading cost is pretty low, $3 all in for a single contract. Now, I'm going to be talking about 3 different Treasuries products, ZF, ZN, and ZB. I'm kind of ranking them versus each other. So the ZF has very high liquidity. It's kind of in the middle of the trio. The volatility is also in the middle of the trio. So it's very liquid and medium volatility. It's not the highest, it's not the lowest, but it's kind of a good balance. Personally, I think this is the number 2 best product for a beginner day trader, especially for someone who wants to scalp, because it's very easy to read order flow. And because the moves are, the moves are not as big as something like ES, you can have very tight stops and very tight targets and not have to worry about kind of a whipsaw taking you out or having your stop run. If you're wrong, you're wrong, and you're very clearly wrong. So yeah, my number 2 recommended product has a lower tick amount, but it moves about the same as ZN, which I'll talk about later. Basically, if you want to trade ZN, but you have a smaller account or you want to risk less money, you should trade ZF. If you have a bit more money, you should probably just trade ZN instead. It can be a bit slow, especially if you're used to trading something like crude oil or Nasdaq or the Nikkei or ES. But this teaches one of the most important rules of trading is patience, waiting for your spot, taking the trade that you want, and not just YOLOing into a trade because you want to make money. So let's move on to ZN. I talked about this a little bit. ZN is the 10-year T-note. One tick is 15.625. You notice this is exactly double of the tick value on the 5-year note. Now, interestingly, the daily range on ZN is actually less. It's only 20 ticks, but because the tick is higher dollar value, you could actually make or lose more money, about $312 as of now. Trading cost is a little bit higher, but the tick cost is double, so you get a better tick commission ratio. It's about $3.26 all in per contract. It is the highest liquidity product of the ones the trio that I'm talking about today, meaning that if you want to trade a 1 lot, a 10 lot, a 100 lot, or a 500 lot, or a 1,000 lot, you don't need to change how you trade it. You're not going to run into any liquidity issues here. But it's a bit on the lower side of volatility. It is the lowest of the trio, but that doesn't mean it's low. Again, these are products for day traders, so there needs to be volatility. You can day trade all of these with no problem. Even though this probably has the lowest volatility, you can still day trade it. It's fine. It's great. I started seeing my success as a day trader trading the 10-year T-note, ZN, and I think that other traders should also give this a chance. It's my number 1 recommended product because it has that perfect balance between liquidity and volatility, and it has a great cost to tick ratio. So you don't have to worry when you're trading ZN about really covering your trading costs. If you trade well, you'll make money. If you trade poorly, you'll lose money. Something like the ZF, the 5-year, your commission, your trading cost is almost half of your tick. So you are losing if you take a bunch of 1-tick trades, you're losing a bit more. Whereas here it's less than half. It's like a quarter or something. I don't know what the math is exactly. Again, very similar to ZF. ZN is slow. But again, that teaches patience, which you really, really, really need as a trader. All right, let's move on to ZB, the 30-year bond. Now, this is actually my bread and butter. This is what I trade now. This is my product. I love this. So tick is very high again. 15.625 per tick on ZN. We have 31.25 tick, double. $31 for a single tick. The average range is about 25 ticks, which is a swing of about $781 on a day. Trading cost is also quite small, get a little bit higher, but look at the ratio here between ticks and trading cost. $3.36 all in per contract. You can get it lower or higher, depends on your broker. This is probably the lowest liquidity product, it is the lowest liquidity product of the ZF, ZN, ZB trio, and it is the highest volatility of the ZF, ZN, ZB trio. So you got a little bit thinner product with a bit more volatility, so you can make or lose more money on a day-to-day basis trading ZB. But it is one of, if not the best, tick to cost products available. I'd really recommend trading ZB if you have good success on ZN and ZF. The tick size is pretty big, so if you have a small account, it can be very painful to take -1 or -2 tick trades on a small account. But if you have a larger account, or if you're doing well, you could consider moving to ZN or ZF. But if you're doing great on ZN and you like ZN, just trade that forever. You can do that for your entire life and make a great income. just definitely be careful of the lower liquidity and the much higher tick value here on ZB as opposed to the other products. Again, being caught on the wrong side of a ZB trade really hurts. So you need to be very disciplined and you need to be ready to get out of trades which don't work. All right, so now I'm going to move on to crude oil. Now, let's see, crude oil. It's got a $10 tick value. The average daily range is 160 ticks. So you're going to make or lose $1,600 on a single contract. Trading cost is about $4.76, all in per contract. Now, very similar to the Nasdaq, crude oil is very low liquidity, very thin, with very high volatility. So it's very, very, very risky. Big wins and big losers. It's extremely popular. Crude. A lot of people trade crude. They love trading crude. Maybe they only trade crude. But I can't recommend this to a beginner. The reason being is these moves are very erratic and it's very news driven. You really need to have a larger account to trade crude to handle some of these bad trades, and to also the margin requirements is also a lot higher. So you need to have a larger account to cover the margin costs or the margin requirement. Now, unlike Nasdaq, crude tends to just spike back and forth all over the place, and it's really crazy and it's really hard to read if you don't know what you're doing. Nasdaq, while it does, you can lose more money on Nasdaq, you can often get a better read than you can doing crude. Crude just kind of does what it wants. So again, if you really want to trade crude, go for it, but be careful because it's really dangerous. High risk, high reward. So just kind of quick overview of the 5 products, quick overview of the 7 products that I talked about today. Now, I'm kind of ranking these out of 5. You can look at the chart. Now, I guess my top 3 beginner products for trading would be the mini Nikkei 225 MJNK, ZF, the 5-year note, and ZN, the 10-year note, the Treasury's products. I give all 3 of those 5 out of 5 for beginners. I think the ES is good for beginners. It's 4 out of 5, but the ticks are a little big. So if you have a small account, be careful about it. But if you can trade, if you have a larger account, you're willing to risk more, you could trade ES from the first day to the last day of your trading career 50 years later, and you'll be fine. I mean, it's the same thing with all these, but yeah. Again, stay away from crude. I don't really recommend Nasdaq because the swings are big. I think ES is just better, but it's really up to you. I mean, if you like these really highly volatile, low liquidity things, then go for it. Again, personally, I trade ZB, which I give a 3 out of 5. It would be higher if the tick was lower, but I mean, it just depends on you. So to wrap up today, definitely spend a bit of time demo trading a few different products and sticking with those that you enjoy or find success with. Really important, stick with the thing that you enjoy trading, okay? If you like trading crude and you think it's fun, maybe you don't make money yet, but you think it's fun trading, you like it, trade crude. If you just want to make money and you are doing well on ZN, then you should trade ZN. Don't trade crude. Don't trade ES. Trade what works for you. It is completely possible to be profitable in any of these products, assuming you put in the time, effort, capital, and you have realistic expectations, okay? So there's nothing wrong with trading ZF your entire life. You don't need to go and branch out to other things. You can learn the ins and outs of ZF and just trade that every day. It's up to you. All right, so that's about it. Thank you, and see you.